Hello traders, Gary Wagner here. It is 12:17 in Honolulu, 5:17 in New York on Wednesday, 21st day of December 2022, and this is the daily report for gold and silver. Both gold and silver are showing fractional moves today. Gold basis, the most active February contract, is down $1.50 and currently fixed at $1,823.90. When we compare current pricing, which is this small red candle here, to the close on the first day of December, which came in at around $1,815, we can see that we haven't made that much headway, about $7 from December 1st to current pricing. And that was over the last 15 trading days. What we can say is that the market has been in a tight consolidated pattern, trading to highs right above 1820 with a max of 1837 and the lows at about 1785, with some instances in which it dipped as low as 1780. The dollar is higher today, and it's up by 0.3% at 103.915. Lastly, silver is down about 0.3% also, a decline of approximately 8 cents, with the most active March contract currently fixed at $24.19.5. There is no doubt we are going into the holiday season with Christmas and Hanukkah occurring this week, Christmas this weekend, and New Year's next weekend. One of the characteristics I expect to see is a further decline in volume. We are starting to see that. Volume is displayed at the bottom of the screen, as well as price consolidation, with the exception of an event unforeseen coming into the market between now and New Year's. My sense is that we can expect to see pricing remain in this particular channel that has most defined gold pricing since December 1st, and that is this vertical line here. And that consolidation, I believe, will keep us on the low side at 1780 and the high side 1837, and it will remain in this channel unless there is some kind of event that is not on anyone's radar. When we convert our Japanese candlestick chart into a Henkinashi, it further confirms the idea that we have a consolidating market with a tight range, as I said, 1780 to 1837. A break on a closing basis above 1837 or a break below 1780 on a closing basis would give us information that indicated we would move back into a correction mode if we broke below it, or back to a rally mode, which is what I'm assuming will happen on a solid close above this price point. The last chart I want to look at on today's video report is a daily chart. However, this chart contains a lot more data, and what we were doing is looking at the series of lower highs that came in after March, and the fact that we broke that pattern in November with the first higher high than the previous high. We are now on our second highest high, and we did also make a higher low. Lastly, if you take a look at the 50 and 100-day moving averages, you can see that it appears as though we will witness a golden cross as the 50-day moving average crosses above the 100. Of course, the 50 crossing above the 200 is the most important type of golden cross, but nonetheless, this is telling us that the market has not completely lost its momentum. As a side note, we will be going into our holiday schedule. We will be working on our Christmas show that will come out on Friday, and then next week we will come out with one major video report which will contain our view of 2022 as well as our outlook for 2023. Of course, if needed, we would send out any trade alerts via text message and SMS. But for now, this has been Gary Wagner wishing you, as always, good trading. We will talk to you on Friday for the next daily update and review. Bye-bye.